next guest is Daniel Roberts. He's the co-founder and co-CEO of IREN Energy, a NASDAQ-listed Bitcoin miner. While Daniel's got some exceptional insights into Bitcoin mining, one of his great interests is economic history and the role that the Bitcoin invention plays in the evolution of human trade. And what's been remarkable today is that this very theme has popped up again and again. It's like Bitcoin's back. We are leaving the physical realm and moving into this digital age, and it makes sense that the money comes with us. So please welcome Daniel to the stage, where he and I will talk about Bitcoin and whether it might, in fact, challenge the US dollar. Thanks very much.
How are you, Jess? Good.
Have you actually met Brian before from Coinbase? Have you crossed paths? No?
No, you did very well.
Oh,
that's a tough act to follow.
Yes, well,
but we'll
it's kind of a big dog, hey? Do you mind just giving us a bit of a history of IREN and how you got into the Bitcoin space, whether or not you were absolutely fed up with the debasement of the US dollar, or how your path led you to crypto land?
Short answer is no to that. Looking at background, started life at PwC, then worked at Macquarie across Sydney and London, doing infrastructure projects, renewable energy. Was then involved in a funds management business in Australia. Right place, right time. We grew that. I sold out about 5 years ago, and basically, at its heart, wanted to get involved more in renewable energy, but on the flip side of the coin. So rather than continuing to build out ultra cheap energy, how do we get on the other side of that and monetize, catalyze low cost excess renewable energy into this digital age, which is why we're looking at Bitcoin, why we're looking at AI, GPUs, etc. In terms of the Bitcoin story, started 2013, bought on the run up to $1,000, thought this is great.
It was a very exciting time.
Very exciting time, I heard you mention it earlier. It then crashed to $500 and I thought,
exciting.
Nonsense, silly magic internet money, sold it all and that was that. So a couple more cycles go by. 2017, did the deep dive into monetary history, seashells, rice stones, all that good stuff. You go, hang on, there's something deeper here. And that was kind of the point at which it flipped.
Can we talk a little bit about that? If we're looking at the advent of human trade and we look at promissory notes, the chair of ASIC earlier was pointing out silver coins used in the Roman Empire. Where does Bitcoin fit into that history, and what is it most like?
Yeah, and it's a good follow-up from the question that's been asked a few times today, which is, do you see Bitcoin as a store of value?
Sure.
Or do you see it as money?
Yeah.
Money is meant to be a store of value.
Right.
So let's come back to that. So if you look at the history of money, right, you've got a pig, I've got a cow. We need some sort of exchange mechanism, right? We're moving out of the age of barter. So what has happened over history is humans converge in any place, any time, on an asset in a community or society that best exhibits pretty objective monetary characteristics to provide as that money. So it needs to be scarce, it needs to be durable. So people that used eggs as money learnt pretty quickly, that's probably not a good one. Wheat's similar. It needs to be divisible. So scarcity, durability, divisibility. And I think when you work through the history of money, and we start off with those seashells, we start off with necklaces, beads, these island nations get demonetized in their economies because the Europeans come in and move a seashell from a neighbouring island to that island and flood the market with money. Like, this is true, right? We read the history books. We then end up with rice stones, whale teeth, all these examples in smaller communities many, many years ago. We then settled on the bimetallic era for thousands of years, gold and silver, because objectively they are a harder form of money. They're scarcer, they're hard to destroy, they're hard to make, and they were a better form of money. Now,
sort of divisible.
Sort of divisible, which is kind of where we get to today, right? So you get to the 1870s, right? We've kind of had the bimetallic era for a couple of thousand years. Along the way, we've had governments, banks, churches control the money supply from time to time. If we go to the Roman Empire, that's a classic example. The height of the Roman Empire, the silver denarius is 99.9% silver. 262 years later, 0.1%.
Sure.
So Roman Empire, were they really good at war and conquest and all that sort of stuff? Possibly, but they're also very good at sales and marketing.
Sure.
While they convinced their population to accept the currency while they chipped the value off the back of it. You can start seeing the analogue. So you get to 1870, silver starts losing its monetary premium. And most of the world, apart from China and India, say, you know what, gold is a better form of money. It's less volatile, it's harder to produce, it's scarcer. So let's adopt the gold standard. We then get to 1914, and this is where things get a bit gnarly, to use one of your words, Jess. Governments need to fund a war. So historically, governments have funded wars through war bonds. And when the population gets on board, people buy a war bond, they get paid interest, and everyone rallies behind it. The UK tried, it failed. Didn't have the support. So what they did was they printed money, like a lot of Western governments. So all of a sudden it goes, well, hang on, if our citizens aren't going to let us tax them, we can't take their gold, we'll just print a few extra pieces of paper. And this is fundamentally the limitation of gold and what led to the current fiat system.
Right.
It is too heavy. It is too hard to transfer. It is too hard to divide. So over history, we have had to trust central institutions to give us redeemable pieces of stuff in return, pieces of paper, a promise. Now, when you have that centralisation, what happened was there's a war that needs to be funded, so all of a sudden it's much easier just to print a few extra pieces of paper, fund the war, and all good intent, let's just tear up the pieces of paper after the war and life will be good. You can't just tear up pieces of paper.
No, not when people own them.
No, and like we hate deflation, right? Like it's politically unpopular, it pushes us right back. So Winston Churchill, who was the Chancellor of the Exchequer at the time, he tried to go back to the gold standard. He said, pride in the British pound, we're going to go back to the gold standard. Later described it as the worst decision of his political career.
Right.
So you then kind of work through Bretton Woods, which was a gold exchange standard where the US basically convinced everyone to hold US dollars as a proxy for gold. Central banks could redeem gold, but no one else could. Eventually people start saying, hang on, there's a lot of US dollars out here. Are you guys sure it's still backed 1-for-1 with gold? Yep, nothing to see here.
Sure.
And sure enough, you hit the 50s, 60s, and people start saying, you know what, I'm a little bit sick of these US companies storming into Europe, buying up all our land, buying up our corporates. I'm just not convinced that this is really backed 1-for-1 anymore. So they start redeeming gold. I think the French even sent their army to the US at one stage. They give us our gold back. Oh, you know, Fort Knox, it's really secure and stuff, hard to get it out. And eventually the game was up. 1971, Nixon temporarily, then permanently suspended the gold standard. We're running out of gold, it's not backed. So, you know, going through high school, reading economics books and learning about how Nixon liberated economics and financial markets, there's always an alternate story.
Sure.
And I guess since 1971, that's when the fiat era has really started in earnest, the latest one. And we've grown up, and it's hard, right? You grow up thinking that US dollars, Aussie dollars, etc. are money, and they have been our whole entire life. But what we are living in is a microcosm of human history and the role that money has played. You look at the number of US dollars in circulation today compared to what it was 1971 in the gold standard. It's about 66 times.
Yeah, I mean, we have a stat that we often run, which is like the amount, like quarter of all US dollars were printed in the last 4 years, which is just an extraordinary statistic. So this story about money as it changes over time, as we've mentioned so many times today, is inherently about trust, and it's trust in that the necklace of shells is going to be worth something, or that this promissory note will be redeemable, or that there is enough silver in this coin for it to be valuable, or that the US dollar is redeemable for my gold, or I will be able to use the US dollar to buy something at some point and it'll be worth something. So when did the trust start to erode? And perhaps it's around the GFC when the quantitative easing programs started. And when did Bitcoin in and of itself become a viable alternative to something like the US dollar?
Yeah, look, I think that point in time is different for different people. some individuals probably have full faith and trust in government today, others have none, and there's a whole heap of us on a spectrum in between. I think the last few years certainly haven't helped the government's cause in terms of establishing and reinforcing that trust. But at the end of the day, trust is one word that we can use for it. At the end of the day, fiat currency is programmed to be debased, just by its very nature.
Right.
You must keep printing it to keep the machinery working, and it is going exponential. It's gone up 8.5%, 9% year on year since 1971. We all sit there as Australians going, yeah, we're awesome property investors. Gee, I picked the stock market. If you've got 8.5% return on your capital, all you've done is preserve your wealth.
Sure.
Right? So I don't know if it's trust as much as just facing reality. Why would you hold a depreciating asset if you can hold an asset that is scarce and not going to be debased? It is interesting, the timing of when Bitcoin was launched. I heard the question earlier around who's Satoshi. The fact that we don't know who he is why Bitcoin survived and why it exists. People tried to launch Bitcoin many, many times before that. And every time they did it, there was always a central party to that where governments and whoever else could go and choke it and shut it down. Henry Ford tried to launch Bitcoin 100 years ago. The 4th of December 1921, front page of the New York Tribune, he's quoted as saying, how do we take currency out of the hands of governments and tether it to energy and kilowatt hours? And that's exactly what Bitcoin did.
Yeah.
It didn't have the technology.
Well, it's definitely swapping energy for money, particularly in the mining business. Can we talk a little bit? The reason that I've wanted to do all of this historical sort of back-looking is because at the moment you look at the geopolitics of the world and there are a lot of countries trying to avoid using the US dollar to trade with each other. Geopolitically, the US government has used its own currency as a way to enforce sanctions, to enforce boycotts, to manage trade. And part of the Bitcoin philosophy is this libertarianism, the rights for people to act independently, irrespective of whether those actions are moral or sound or fit in with society's values. Bitcoin is often used as a tool to circumvent using the US dollar. Is there a risk with that? Can you sort of talk to me about how we can accept that digital money is here and arrived, but it does not have the same checks and balances that we have applied to the US dollar? Is that riskier for democratic values in the world?
Well, look, it does certainly look like we're moving towards a multipolar world, and whatever that means in terms of currencies and shift of power, etc. The role of the US dollar, look, it probably is still the hardest currency that we've got, and will continue to accrue value relative to others over time. I think in terms of checks and balances, if we step back and go back to what money is, right? Just think of money as any other asset, the pig and the cow analogy, but instead you've got another asset that you can swap in between. Like, the whole idea of money is it is meant to store the fruits of your labour across space and time. You are meant to be able to go to work 9 till 5 and store that labour in something across space and time. Ultimately, that's what money is. But unfortunately, because of the fiat era that we're in, we used to have gold to do that. You put gold under the bed and our savings are safe. But today, because fiat currency doesn't behave that way, it creates this whole financial system which is running around in a circle trying to preserve wealth, let alone grow it. So you get all these financial advisors charging fees, everyone's chasing stock market returns, everyone's forced to be hedge funds. No longer are we able to specialise in our trades. We've now got to become part-time hedge fund managers just to preserve our wealth. So that's kind of going around your question. To answer it directly, you say, how does it make sense for us to compare the two systems? One, we've got a group of people in a room that meet every month and work out what the price of the most important factor of production is in a society, so a centrally controlled economy, or we've got something that is open source, controlled with mathematics and secured by energy.
Sure.
Like, how do I make decisions in that paradigm for the long term? I don't know what the price of money is going to be tomorrow. I don't know next year. It goes up, it goes down. Over here, I know, well, gee, if I buy a Bitcoin, 1 divided by 21 million, and no one can ever change that.
Sure, I suppose there is an argument that the volatility in the price of Bitcoin can undermine people storing their wealth in it over time. But can I just sort of ask about the deflationary case for Bitcoin? I mean, as you mentioned earlier, aside from receiving taxes, most governments fund their services, fund their spending on public services through debt financing. You mentioned war bonds before, and they still are selling bonds. I mean, what would happen if that debt was denominated in Bitcoin? I mean, wouldn't those debt loads expand and become more expensive given Bitcoin has a fixed supply?
So if they couldn't, do you know Australia, I think, was debt-free at the GFC, and now we've got $1 trillion of debt bailing out the private sector. If you can't print your own money, there's an argument to say you're going to have to be accountable.
Right.
Because at the end of the day, you've got a population you have to convince that taking their capital and investing it in social programs, whatever programs it is, needs to make sense. Look, does it create a deflationary environment? Like, why do we need inflation? Let's ask that in the first place, right? Step back, as humans, why does it make sense that prices are going up? You know, whether it's the 2 to 3% that the government tells us, or the 8.5% that it really has over the last 50 years. We as humans get better at stuff, at making it, at producing it. You look at TVs, they get better. Why do prices need to go up?
I guess my next question is sort of about like economic growth then, because as I understand, like prices rising and wages rising, I'm sure the idea that they would stay stagnant over time isn't necessarily. I couldn't imagine a world in which wages aren't rising and things aren't becoming more expensive, but perhaps that's because of the fiat example, the fiat world that I've lived in. But would the use of Bitcoin as the money of a society limit credit growth? I mean, would that put a limit on economic growth?
But step back, what are you measuring GDP in? It's denominated in the fiat currency.
Right.
So step back, when the US went on the abolished the gold standard and we had free-floating fiat currencies, 1971, there were about $4 billion of Australian currency.
Okay.
Today there's over 500 billion. 125 times more Australian dollars exist today than they did 50 years ago. If GDP hasn't kept pace with that new money supply, then we have gone backwards as society. All it's done is keep pace with the denominator. It's like, let's sit down and play Monopoly, right? And we'll have one game and we'll go around in circles and we'll accumulate property. And then we'll play a second game. And in the second game, every 3 minutes, we're going to take the money from another Monopoly board and throw it on our board. What's going to happen to prices?
Well,
Economic growth, GDP growth. Well, if you're denominating something that you just keep printing more of, then of course it's going to nominally go up. But what have we really achieved?
sure. Can I just throw this out to the room? Is there any questions? Please put them forward. I'm drowning in economic terminology up here, so if anyone's got any great insights or challenging questions, please put them through. Dan, do you mind if we switch a bit and talk a bit about Bitcoin mining and talk about the industry that you've built this company in over time? So IREN Energy's initial pitch is to place itself close to excess renewable energy capacity and use that to create hash rates, which are used to mine Bitcoin or generate, or just computing power that you're selling into a lot of GPUs and rendering services as well. Can you sort of talk to us about energy prices and how the Bitcoin mining industry has sort of evolved over maybe the last 24 months? What have been some of the peaks and troughs?
So Bitcoin mining, I mean, the mining word's a bit of a misnomer in a way. At the end of the day, it's just computers and electricity. Bitcoin mining is what secures the Bitcoin network and ensures that those characteristics that give Bitcoin value are cemented, right? There's only 21 million, you can't stop it. That transferability, divisibility, durability, scarcity. Go back to gold 2.0. It's an order of magnitude better than any other prior money that we've had. In terms of Bitcoin mining, basically every 10 minutes the protocol generates a random number. All these computers around the world use trial and error, brute force to guess that random number. The first computer to guess the number gets a couple hundred grand worth of Bitcoin, process starts again. There is no edge. It's entirely probabilistic.
Sure.
The more computer power you have, the more Bitcoin you get. So if you've got 2% of the global network, you get 2% of the Bitcoin. So it's highly predictable in Bitcoin denominated terms. So we've built large-scale data centers across North America, bought the computers, plugged them in. Typically, historically, you've bought them on 9 to 12 month cash paybacks. So profitable enterprise, Bitcoin goes up, you get a lot more, Bitcoin goes down, takes a bit longer. But ultimately what we've developed in the process is these power-dense data centers where we've gone close to the source of low-cost excess renewables, and we're taking that energy and monetizing into this digital age, right? So things like NVIDIA GPUs for generative AI, we've just bought some.
Right.
We're going into that. Because at the end of the day, we're doing power-dense computing, whether that's application-specific integrated circuits for Bitcoin mining, or it's GPUs for generative AI. At its heart, it's the same data center. You're taking power, you're running it through a lot of servers and producing an end output that people value.
Do you think there's the criticism of mining is that it is hugely power intensive, and do you think there is a case for very stringent regulation on those who are performing Bitcoin mining to only use renewable energies or energy sources that are not necessarily destabilising the broader grid or contributing to the onset of climate change?
Okay, bit in that.
Yes.
It's like fundamentally the opposite. So Bitcoin miners, because of their geographic flexibility, flock to places where you get stranded energy.
Right.
Spilt energy where by definition people don't use it or value it. So let me use our Texas facility. We're up in the Panhandle region, 32 gigawatts of wind and solar built with government incentives, well done. 12 gigawatts of transmission line capacity to ship that down to the load centres in the southeast. 32 gigawatts of generation, 12 gigawatt pipe. How much spare power is there? So what Bitcoin mining does is when the wind blows, the sun shines, we take all that cheap power, negative priced at times, turn it into Bitcoin via the Bitcoin network, liquidate it, pocket the cash, and every 10 minutes we've got an algorithm that looks at the power market. And you know what? If the energy market peaks, there's a network outage, a weather event, retail consumers just want that power back, then our algorithm automatically sells the power back into the market. So in August, we had an average power price at our Texas facility of negative 8 cents a kilowatt hour.
Oh, wow. Getting paid.
We are getting paid to take that power. So to be accused of taking power away from other people's and we're energy guzzlers, like it couldn't be further away from the truth. The reality is people are conflating their views of an emerging technology, and they probably said the same thing about the internet 25 years ago, and issues we've got around the negative externalities around power generation, right? It's probably the same people watching cat videos on YouTube, using hair straighteners because they don't like curly hair. At the end of the day, energy consumption is a discretionary thing. People do it because they have value. And you know what? If they're right and Bitcoin doesn't have value, if generative AI doesn't have value, then don't stress, it will stop using energy eventually when people work that out.
Yeah, let the market do its thing, I suppose. If there aren't any questions for Daniel, I'm going to wrap up here. Anyone got anything? Oh, one here in the middle.
Hi, it's Nick Strain from LMAX. I don't disagree with anything you've said with regards to Bitcoin. How does this transition happen smoothly in society, given the extent to which we've gone down the path we are with regards to credit and debasement of currencies?
Good question. Crystal ball. Look, and you've got to kind of separate out the two things, right? Like one is Bitcoin, emerging monetary asset, the nature of its scarcity, the halving events every 4 years. It will naturally accrue value over time. The longer it survives, the lower the perceived risk, the marginal buyer comes in, the lack of supply, it will continue to have those boom and bust cycles. Outside of that, you've then got to look at the fiat system, the way it's programmed, our endless need to chase economic growth and GDP denominated in an asset. It'll run its own race. At the end of the day, do those two paths collide? Eventually, does one take over from the other? What does that look like? I think we're in uncharted territory, right? At the end of the day, all I do is make decisions at a personal perspective. If I've got some savings that I want to hold for 10 years, do I want to keep? I've got a few options, right? I can put it in fiat currency, which debases, probably halves every 10 years in its value. I could put it in gold. Gold's probably the best we've had, but even that halves every 35 years, gets debased 7x over 100 years. That's at 1.8% year on year. Or I can buy one Bitcoin and know that it's only ever going to be 21 produced, 21 million that is, and no one can take it away from me. I don't know, I kind of choose the latter.
Not financial advice. Great.
Personally.
Thanks very much for your time,
Thanks,
Daniel.
Jess.
Thanks for your attention.
Thanks, everyone.
Thanks a lot.
Thank you.